I've been exploring crypto for the last 4 years, and I made some really good decisions and also some really bad decisions. But in this video, I'm going to share with you the 3 things I wish I knew before I started crypto so you don't have to make those bad decisions. And we're just going to hop right into it. So let's get into it. The number one thing that you're really going to want to know is market cap. And I'm going to tell you why this means so much more than price. First, let's start off with a little story. A buddy of mine that showed me about crypto, he showed me Dogecoin when it was really, really low. And we were so hyped up off of the price. We were just thinking, man, if it was just a fraction of the price of Bitcoin, just think of how rich you could be. But little did I not know that market cap played a bigger role than the price. So market cap basically is the price times the circulating supply. Okay, so what you're going to want to do is you could go over to CoinMarketCap and you could find the token's current supply that's circulating. And you're going to multiply that by the price. And that will tell you the market cap. So that's going to tell you whether your token is a extremely large token, a large token, a medium cap, or a small cap token. So a small cap token is more in that, $20 million market cap. Once you start to get into the 200 to 250,000, $250 million market cap, then you're going to start getting into that medium project. And once you start getting into the 1 billion to 2 billion, you're starting to get into the large market caps. And just for a reference, Bitcoin currently is sitting around the $1.3 trillion market cap. And Ethereum is sitting, I believe it's at that $500 billion market cap. So this is going to tell you how much your token can do a 10x or a 100x. And I believe Dogecoin, when it was at 70 cents, people were thinking it can go to, Bitcoin's prices or even Ethereum's prices or just a fraction of that. But you would have to take so much money in order to move that market cap to those positions. So don't focus on the price. Focus on the market cap. We'll keep it simple as that. There's a lot of other things to deal with, liquidity and stuff like that. Comment below if you would like a video on that. The second useful information is going to be stablecoins. Now, before, when I was trying to understand how do you cash out of crypto, I was trying to understand, well, what do you do? Do you sell your Bitcoin for fiat, USD, or whatever nation that you're in? And then I learned about USDT, which is Tether. There's a USDC as well. There's a DIA, but we're just going to keep it simple and do USDC and USDT. So basically, you can swap your token for these stable coins, and they are pegged to the dollar, so you don't have to exit the crypto ecosystem. You can basically stay within the ecosystem, but just trade your token for these stable coins. And people are doing this sort of like a Venmo and stuff like that, where they're actually sending funds via Tether or USDC over borders. And it's all decentralized, and it's all, there's gas fees, so it depends on what network and all that, but we won't get into that. So basically, you have tokens, you don't have to sell them in exchange for dollars. You could basically just swap them for these stable coins. Okay, now that I switched my position, I got your guys' focus. So if you're finding any value from this video, I'd really appreciate it if you could like, subscribe, do that whole YouTube thing. It'll really help me understand what you guys want to see in this video. If you can also comment below. Other than that, let's get right back into it. Now, the third and final useful piece of information is decentralization. So that's a word you're probably going to hear a lot. And I would hear it a lot when I first started crypto, and I just didn't understand it. So basically, think of it like stocks. Your stocks are on a brokerage account, like Robinhood, Trade America. So basically, what you can do with crypto and why it's a big deal is so it's a decentralized network. And these tokens, you're able to actually offboard them and keep them yourselves. So it's kind of like a bankless feature. So basically, let's say I buy some crypto on Coinbase.com. Sorry, not Coinbase.com. That's crypto.com. Coinbase. And let's say I want to store them myself because I have been hearing some news saying Coinbase is going to go under. So any tokens you hold on those exchanges are basically IOUs, just pretty much like the money in your bank. It's just an IOU. They're not actually storing that amount in their reserves. So what you can do is you can actually send your funds, your tokens, to a wallet. So there are different types of wallets. There are hot wallets, which I'll make a video on, these 3 wallets. So we have hot wallets, cold wallets, and paper wallets. And to not get confused, basically your wallet will have a address to it, and you'll see those crazy long addresses, okay? And you can send your funds to those wallets, and you could just keep them yourself. And you can send them to other wallets, and you can actually track all this on any blockchain explorer. Basically, you are solely owning your assets. They're not just on an exchange, and you're not just, there's no use for a middleman. So those are the 3 simple things that you should know before you start crypto. Just a little recap. Okay, market cap, you're going to want to pay attention to that, not the price. Stablecoins, you don't have to sell your crypto for fiat in order to get out. And decentralization, you do not have to store your assets on an exchange. You can be the sole owner of your assets. So that's all for this episode, and you guys have a good one.